Rachel Reeves and her senior Treasury ministers have been forced to go on the offensive for a second day following the budget amid market jitters and anger among voters. Wednesday's decision to up taxes to raise $40 billion towards increased state spending of almost $70 billion per year, with the rest covered by borrowing, spooked investors. The scale of extra borrowing around $32 billion a year on average saw yields on government bonds increase as the market responded to the Chancellor's plans. Ms. Reeves has played down the impact, saying that markets will move on any given day and sought to offer reassurance of her commitment to economic and fiscal stability. Markets remained spooked by the maxi budget today, with the yield on 10-year gilts spiking in early trading, though still below yesterday's high. While sterling recovered slightly in early trading against the dollar, it remains below its pre-budget position. Her deputy today was forced to distance the situation from that which followed the 2022 mini-budget, which sent the markets into a headspin and ended Liz Truss's premiership after 49 days. Chief Secretary to the Treasury Darren Jones told Sky News that markets always respond to budgets in the normal way, adding, "I think we've all got PTSD from Liz Truss." Just let's compare the two different scenarios because they're very, very different. So, under Liz Truss, as we saw, they sacked permanent secretary. They ignored the independent office for budget responsibility. They announced $45 billion of unfunded tax cuts and said they were only just getting started. And then the market went mad and we all know what happened. Completely different in contrast to now. It was a painful day for the pound, which sank close to $1.28 versus the US dollar, its lowest level since August. The FTSE 100 took a hit too, with blue-chip housebuilders Persimmon and Taylor Wimpey each falling 7% on fears that interest rates may stay higher for longer. Traders dumped UK bonds known as gilts in a sell-off that drew unwelcome comparisons with Liz Truss and Kwasi Kwarteng's disastrous mini-budget 2 years ago. The sell-off, which gathered momentum throughout the day, sent UK government borrowing costs to their highest level for a year, adding to the volatility seen in the hours after the budget on Wednesday. Ms. Reeves has played down the impact, saying that markets will move on any given day and sought to offer reassurance of her commitment to economic and fiscal stability. Paul Johnson, director of the Institute for Fiscal Studies (IFS), had warned that the implausibly low spending increases in the budget meant there was a risk taxes would have to rise again if the economic growth labor is depending on does not materialize. But the Chancellor told Channel 4 she would absolutely not come back and raise taxes once again. She said, "We have now set the envelope of spending for this Parliament, and we're going to live within our means."